What's up, everyone? It's Scotty with MoneyVest. So this is going to be your market update for Friday. We also did get the unemployment report in the first Friday of the month of February for the previous month in January, which I also did a live stream for. And also we did have of course, Jerome Powell's speech. We had lots of companies reporting earnings. So this is going to be a complete market overview and update on the technicals and fundamentals of the entire US markets. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. The first week of the month is the best time to join if you want to join and be a part of our MoneyVest community, and of course access all the trade alerts, buy and sell alerts, options alerts. Everything's going to be included with the link down below, and also you get access to my watch list and of course all the 45 plus members only Patreon videos. Do connect with me on Instagram as well. MoneyVest turns 3 tomorrow, so it's February 4th is MoneyVest's birthday. So I want to again thank you so much for being a part of this amazing community. I did post something nice over on Instagram, so definitely do check that out. My handle is going to be CASWRP. So S&P all-time highs at 49.58, up over 1%. NASDAQ pushing up 1.74% on the back of Meta and Amazon. Meta having its biggest day ever, not just its company's biggest day, but single day market cap gains. Meta recording a rally that propels stock to the top of the leaderboard. And it's kind of funny that not too long ago, this Meta was actually the company that lost the most in one single day. And now it's on the other side of the spectrum with almost $200 billion gained in one single day. Now, I do believe that February, the month of February, is actually going to be red for the markets. I do believe that. I'm actually not one for making predictions. I don't like to make predictions, but I do believe that the month of February is actually going to be down for the S&P or the NASDAQ, because so far, I mean, the markets have done really well. So if you come over to the S&P 500, so far in the month of February, we are seeing the markets up over 2.33%, hitting a new all-time high. But I do believe or have an expectation that it's possible that rest of February, we actually do start rolling over a little bit and turn negative on the month here. We'll see. We'll find out. Again, we'll see how this video kind of ages towards the end of February. And this right here is the NASDAQ up a little bit over 3%. So far in the month of February. But like I said, I do believe that it's possible that we do see a pullback and a red month this month. Now, strong January historically leads to an annual S&P 500 gain. So rest of the year is still open. It's an open book what 2024 is going to bring to us in terms of returns. But this right here is S&P 500 monthly return in January versus the annual percentage changes. And most of the times you'll notice that they're both moving in the same direction. There's a high correlation between how January performs versus how the entire year performs, and most of the times they are moving in the right direction and the same direction. Now, positioning on the S&P 500 is stretched, so asset managers' futures positioning on U.S. equities is highest in 2 years, so incredibly bullish right now. Everybody is. Again, there's a lot of sentiment, there's a lot of optimism in the markets. That's exactly why I do believe that there's going to be a time here fairly soon where there is some level of profit taking and for the markets to start showing some signs of potential weakness, because it's been long overdue, and it's just market cycles in general, right? Nothing to be writing home about, but something to be prepared for eventually when the markets do see that weakness, and that's when we're going to start swooping in with our cash to looking at buying opportunities. Now, markets are still pricing in very optimistically for rate cuts. So 1, 2, 3, 4, 5, 6 rate cuts are still priced in, with the first one coming in May of 2024. I actually mentioned this in our Discord earlier, so definitely do check out the links down below if you want to join and be a part of our MoneyVest community. But this right here is basically what I mentioned as part of our text analysis. So this is what we talked about. This is what I mentioned. And I basically said that in terms of rate cuts, after listening to Powell, I'm reiterating the idea that the Federal Reserve needs an incentive, right? Needs an incentive to cut rates. What's the objective with a policy pivot? Very important, right? The saying goes, if it ain't broken, don't fix it. And right now, there is nothing broken in the economy. There's literally nothing that's actually broken in the economy. And economic growth is strong. Labor market is tight as heck, and with one of the strongest prints for non-farm payrolls and unemployment rates sub 4%, from my point of view, Powell and the FOMC members have no incentive to cut rates and begin quantitative easing right now. They have no reason to kind of shift that policy path at the moment. Now, one of these 3 things need to happen before I can confidently expect the Federal Reserve to cut rates. Number 1, unemployment or jobless claims starts moving up, or there is weakness in the labor market pretty much. Number 2, inflation continues to trend down, gets down to 2.5% or lower. Or number 3, 1 plus 2 both happen at the same time. And until then, I think it's fair to sit tight. Market expectations have now been pushed out to May cut. We'll see if that gets pushed out even further or moves back to March, depending on inflation, unemployment, and of course, economic growth as well. So there's a lot of variables at play, of course, but the idea is that markets are still very optimistic with the rate cuts, even though we're still getting a very, very strong labor market report with a 353,000 job print, 3.7% unemployment rate, with, of course, manufacturing payrolls increasing 23,000, private payrolls accounting for 317,000 jobs in the month of January, and the prior number also revising up by over 50% on a month-over-month basis. Now, this right here is the entire heat map. Again, small pockets in the market here. AMD, Nvidia pushing up to new all-time highs. Meta, new all-time highs. Amazon pushing up to a new 52-week high, almost 8%. Apple was slightly down. Microsoft pushing up to a new all-time high. So again, lots of momentum in the markets for these big tech Magnificent Seven companies, and they just continue to become more and more concentrated and a bigger piece of the entire puzzle and the entire pie here for the markets. This right here, again, the entire market. So Chevron also up. I've got videos coming out on all these stocks, so don't worry. I'm traveling tomorrow morning, but I will be posting a lot of videos for Meta, for Amazon, for Microsoft, Nvidia, Tesla, like all these earnings. We are going to break down one by one. So those are going to be videos published fairly soon in the month of February. So a pretty split day in the markets on Friday, a pretty split week so far. And of course, in the last 1 month, we've still seen technology, comm services, industrials all pushing higher, kind of leading the S&P 500 and the NASDAQ. Natural gas pushing up, rough rice was up, and then we had gasoline, oats, palladium, soybean, crude oil, all pushing higher. Bitcoin just over 43,000, and Ether just over 2,300 as well. So coming back over to volatility, still stays a little bit more muted, under 14, so very, very subdued. I'm just patiently waiting, looking for volatility as high as 18, 20 to as much as 25, 30 levels before I start deploying cash a little bit more aggressively. Right now, just dollar cost averaging into the broad-based ETFs as part of the experiment, SMH, Cyber, or VUG. And when it comes to individual stocks, kind of here and there, dabbling a little bit on Enphase, dabbling a little bit on maybe Tesla. I haven't sent out an alert on Tesla, but I'll be looking at closer to 160s and 150s if and when it actually does drop below certain levels that we are watching very closely for these companies. But other than that, I mean, Amazon, Meta, Amazon, I did push out my covered calls on Amazon a little bit and did lock in sort of like the underlying profit, which was obviously as part of the position. But at the same time, I did take a small loss on the covered calls that I had to roll out for 1 month further. And now my expiration's March. So I did not lose my shares, still have my shares. And the strike price I picked was 170. So I did lock in about another $10 per share profit. But at the same time, those calls are once again in the money. So, if Amazon stays above 170, that's great. I'm able to lock in even a heftier profit. If it drops down below, I'll still get to keep my shares and, of course, collect all the premium because that call is going to be out of the money. Now, crude oil prices starting to roll right back down. That's great news. They were down 2% on Friday, and we are starting to come back down to that support. It's fantastic. It's $73, $74 a barrel. And of course, if it does continue to pull back further, if it does end up, rolling over and selling off even further, $66 is going to be that next support level to watch for crude. And right now, of course, we're seeing the RSI also rotate back lower. Ethereum and Bitcoin just at a support. So there's not a lot to go over in that regard, but we are just trading at a support for Ether, just over 2,300, and Bitcoin just over 43,000 at the moment as well. Coming back over to the S&P 500. So this right here is going to be the SPX chart, and we are pretty much at an all-time high at just over 49.58. So getting closer and closer to 5,000, and the momentum is strong. The momentum is incredibly strong here. So again, congratulations to anyone who is in the market, is able to trade this market and taking advantage of this bullish momentum higher. Who would have thought? We'd be hitting a new all-time high in January of 2024 after hitting a significant low in October of 22. So in just under 18 months or so, the markets have recovered tremendously, and they've done really well to get back up to all-time highs. NASDAQ still has a little bit of ways to go, but a very strong day on Friday, pushing up 1.7%, kind of coming up back up to that resistance at 15,600, and 16,000 is really going to be that level. We're still off by under 4% to get to new all-time highs for the NASDAQ. Apple, on the other hand, with a massive recovery intraday, so getting bought right back up, and intraday pushed up a little bit over 3.66% from lows of 180 back up to 185. This right here, huge support getting validated once again. This is exactly where we picked up Apple here last time, and of course it's getting bought up once again from those low 180s at the moment. So resistance is going to stay put at 190 all the way up to 198. And of course, I'm a heavy buyer in the 160s for Apple because that's where my intrinsic value is going to be. Talking about Amazon, and Amazon here also with a huge breakout, as we've already talked about. Beat on EPS, beat on revenue. I briefly covered Amazon earnings on the live stream. A more specific video on Amazon is going to be coming out very soon. And 176, 177 is going to be that next resistance and target to watch for Amazon, with a little bit of gap that it needs to fill over here as well. Talking about Tesla, and Tesla here, of course, on the day was slightly down. Continues to be a little bit under the radar, under the pressure here of course, what we're seeing with margin compression, price cuts, competition, a lot of things, interest rates that are affecting Tesla and both Enphase at the moment. But this right here is going to be the entire technicals, where we are kind of validating that $180 support really well. We are, of course, very oversold at the moment. Support levels, like I said, it's going to stay put at 180. Resistance all the way up to as much as $247, $250, and not to mention a much stronger support in the 150s for Tesla as well. So this is the overall downtrending channel, lower highs and lower lows. Again, support levels going to stay put down to $180 per share for Tesla. Very quickly going over Enphase also while we're here on this chart, getting bought back up here intraday, but the earnings are going to be coming out next week. So on Tuesday, they are going to be reporting earnings. And right now, resistance is going to stay put at close to $107. Support level is going to stay put at $92, $93 per share. So we'll see what Enphase has got for us in terms of reporting those numbers on Wednesday, I believe, or Tuesday, February 6th. Costco here. On the day, also, I feel like pushing higher. So retail, Costco's done incredibly well, hitting yet another new all-time high, $709. So it's absolutely fantastic. 71 basis points higher. Support level is going to stay put down to $644 per share for Costco. Now, coming back over to NVIDIA. I mean, NVIDIA and AMD are nothing short of extraordinary stocks here, just absolutely crushing it right now with over new all-time highs coming in time after time. But just got to be super, super careful here. I mean, SMH was also up on the day, so it was up a little bit over almost 2%, so very strong move to the upside. But we need to be very careful with SMH, with, of course, semiconductors and a lot of these stocks, because they've just continued to move up to new all-time highs. And, of course, they're getting overbought, overextended. Valuations are getting a little bit too up there. So I'm just super careful here. AMD I own, SMH I own, happy with what I have, but obviously not going crazy at these prices at the moment. AMD also, 157 is going to be that support, resistance, and targets up to 185, and that's pretty much the all-time high for Enphase. So that is going to be that target and that resistance to watch for AMD. Meta platform first, PayPal. PayPal here on the day was also very flat. They've got earnings coming out, I think, next week. So Wednesday, February 7th is when they report earnings. Resistance is going to stay put at $65, so that is going to be that target. Support level is going to stay put at $56 per share for PayPal, with, of course, another target and resistance back up to $70 per share for PayPal as well. So again, we'll see what the company has in store for us in terms of reporting those earnings. And so that's going to be a very important, of course, event for PayPal as well. Resistance is going to stay put at $65. And then Visa here continues to trade at an all-time high. So, of course, we are seeing Visa at $277. Very, very nice move back up from that 200 SMA, up over 21%. Resistance, again, unknown because it's in price discovery, trading at an all-time high. And RSI MACD also kind of trading up there, pretty overextended at the moment as well. Talking a little bit about Meta Platforms, of course, at an all-time high, $475 per share. I've got a very, very personal and very important video coming out on Meta very soon, so stay tuned for that. I'm not going to cover too much on this, but got a very, very important video coming out on Meta here very, very, very soon. Netflix, on the other hand, also almost at a new all-time high. Of course, all-time high sits well over $600 per share for Netflix, or might even be higher. But right now, it is at a resistance at a target up to 572, 573. So that is going to be that resistance. Very, very overbought. So, needless to say that it is there is potential for a bit of a pullback. And of course, we got a gap to fill over here for Netflix as well. Talking about Google. And Google here also up over 0.5% right now, so getting bought back up. I think Google has a lot of potential opportunity here, considering that it's very, very oversold at the moment. Not to mention that it's trading at a very strong support. Of course, the lower the better. So 126, 127 is going to be a much stronger support level to watch for Google. And then finally, we got Microsoft. And Microsoft here almost at a new all-time high, well over $410, $411. Of course, market cap now well over $3 trillion here. Support level is going to stay put down to 384. And a very, very strong and consistent rally for Microsoft as well, from its lows of about 200 SMA sitting now at well over 35% from its lows of back in September of last year. So that's where we are with the market. I do believe that I think there is going to be something in store for us in February with a little bit of a pullback possibility and maybe even a red month. We'll find out fairly soon. But hope you all enjoyed this video, find it helpful. Make sure you drop a like and don't forget to subscribe to the channel. There's going to be a link down below if you want to join, be a part of our MoneyVest community. And if you have any questions, feel free to reach out and I'm more than happy to help. And as always, happy investing. I'll see you all in the next video.